Good morning, trading world. It is January 6, 2022, 7:34 a.m., and this is my pre-market outlook. I apologize. It seems as though I'm coming down with something. That's the reason I'm getting my Barry White on this morning. But on to the title of this morning's outlook. Which is, did you feel the fear? I didn't. Did the VIX feel it? No. So the dippers will be coming soon. Looking at the VIX to feel the fear, but the VIX basically yawned at the sell-off yesterday. We are still less than 3% away from all-time highs, so we haven't gone anywhere yet. Don't be fooled. The dip buyers will be lured in soon, and there is nothing wrong with taking advantage of up moves in the market. But don't be blinded and think that the market only goes up. Despite what you may have seen over the last 7 years or so, there's a saying that the market will take the stairs on the way up, but jump out the window coming down. Now, the fact behind that is markets do trend up over 70% of the time. However, that 30%, when it's in that opposite or downtrend, it is more likely to move 2 to 3 times as violent and moves 2 to 3 times as fast as it did going up. So, now with that said, I am starting to see the makings of a bounce, but it will take a day or so to come together. It may not happen today, but it may be right for Friday. I don't recommend buying straight calls for the bounce that may take place. Buying those straight calls right now in this environment, the volatility could wreak havoc on your calls, squeezing the juice out of them where you only see a quarter of the profit you thought you were going to see. I recommend using call debit spreads, and this will kind of hold the volatility at bay. Now, another strategy I will be using is legging into put credit spreads. This is buying the low strike and selling the high strike. And the way I'll be doing this is with a calendar twist, which means that the puts that I'll be selling will have a closer expiration date than that of the long puts. Now, my goal for doing this is to use the rally to pay for a big portion of my further dated puts. Please do not try this if you're unfamiliar with calendars or selling premium. Now, let's get into key levels of the day. All right, here we are with the key levels to watch today, starting with resistance. Jack resistance is going to be 469. Queen resistance is going to be 470 through 472. And king resistance is going to be 474 through 476. On the support side, the Jack support is going to be 466 through 465, and Queen support is going to be 464 through 462, and the King support is going to be 460 through 455. Now, as we become more volatile, I have to lean more on feel than the actual levels. And that is also why you see the levels spread out over large ranges, because it gets increasingly hard to kind of fill out exact points when we're this volatile. And the reason for that, when we are this volatile, we tend to overshoot. And we tend to overshoot by large margins. So we have to be very careful with that. And at some point in time, when volatility gets over 25 to 30, levels become less important. As far as on a day-to-day, we could probably go back and point to things on a larger time frame, on your daily and weekly, as far as where we'll be headed. But on an intraday basis, levels become less important. Now, the field that I have for today is consolidation. We should get this consolidation for a while, and then possibly a dip lower, either during the trading day or possibly overnight. This will hopefully lead us to a dead cat bounce starting on Friday that will last maybe 2, maybe 3 days. As with anything, the makings of this bounce will be short covering. And as more and more shorts begin to get covered, the dip buyers will join in. And as dip buyers join in, it will take us to overshoot levels and cause an explosive move up, bigger than what is normally anticipated. So I want you to be careful and watch for that. It's hard for me to see it starting today. This is the reason why I see consolidation for today. This will be something likely to happen on Friday, given that it's an expiration day. So it's that perfect storm to kind of mix up to have that short squeeze and violent burst. So that's pretty much how I feel about today. In order for the bounce to start, one of the things that I talked about yesterday was the cycle, and letting your indicators cycle. And I'm going to go again to the 4-hour chart. And in looking at the 4-hour chart, I'm going to be looking for the intraday charts below that to cycle, to go through a full cycle. And at that point, if we can get the 4-hour and the MACD on the 4-hour to kind of close its delta, that would be the start of the bounce. But as long as the MACD has a tilted down and the lines are starting to get further apart, it's going to be hard for me to consider any type of bounce happening from that point. So that's what I'm going to be watching. Let me see. All right, upon further look at the charts and looking at the daily, I don't really want to sell the put spreads or sell the put side of the spread until we hit close to 465, somewhere around there. Once we hit that 465 level, and the bad part is I'm not sure whether it's going to happen during the day or whether it's going to happen in the overnight session, because there's a chance that we may not even make it to that level during the day. So it's going to be hard to see when I'm going to get those the bull put spread on. But one of the things that I'm going to look at, let me bring up a daily chart to actually show you what I'm looking at. Okay, now that I have a daily chart up, one of the things that I'm going to be focusing on is the RSI. And right about here on the RSI, we're hitting a important level to me, and that's the halfway point. And usually at this halfway point between, getting to the coming from overbought going to oversold, usually at this halfway point we can usually have some type of reversal or pullback. So at this level right here, I'm going to look for us to actually pull into this 466 or maybe a little bit below into this 465 area somewhere, and that's when I'll expect we get this the kickoff of the bounce. So that's going to be what determines the bounce or the start of this dead cat bounce. So the energy on the daily chart is low, so I'm looking at it to a point where we're going to have to consolidate to kind of build that energy back up to run. I've made this analogy before, where if you think of the market as a sprinter, you can only run but so far before you're out of breath, and you have to kind of stop and put your hands on your knees and double over and breathe, before you can take off and run again. And that doubling over and breathing is basically where the bounce or the smaller charts take back over, and we start to get this bounce building in the opposite direction that we just ran. So that's what I'm looking at happening. And then once we build up energy again, then the longer term time frame can take off on another run. But until we build that energy up, we're going to be in a big consolidation type pattern. So that's what I'm looking at, just to go in a little further in depth. As always, know and define your risk, or define and know your risk, and profit will come. Wishing you a successful trading day. Have a great day.